and welcome everybody. This is Amanda Rose from your Archer Travel office in the USA, and today we have joining us Colin, and this is for our Australia-based agents, and he's from CoverMore Travel Insurance, and he's going to be giving us a presentation on that. How are you doing today, Colin?
Excellent. Thank you, Amanda. Thank you for the intro.
Yeah, we're so glad to have you. And if you guys, we're going to be doing a little bit different today. So if you have any questions during, feel free to put those in chat, and we will ask those during Colin's presentation. And this will be recorded. It'll be right here in the videos tab of this page, so you guys can go back and rewatch this as many times as you would like. Without further ado, Colin, we'll go ahead and let you get started. Thanks again for joining us.
Excellent. Thanks again for the introduction. So today I am going to give you an overview of our current PDS, the changes that occurred to the product disclosure statements in the middle of last year, actually now. It's a little while ago that happened. But the intention is to make sure that we're all on the same level of knowledge and understanding. So today, as I say, I'll go through the PDS. I'm going to give you some demonstrations of how to choose the destinations for your customers so you can get the best premiums. Believe it or not, COVID is still a thing out there. Our number one claim at the moment is for COVID-related claims whilst people are on trips. And then I will jump into our B2B system, the system that you create quotes and issue policies through. And I'm also going to introduce you to CoverMore Connect. CoverMore Connect is your dedicated agent website, and it's literally the resource that I go to answer all the questions that you may have. So with regards to our product update, we did have a PDS release in the tail end of June last year, and all the changes that there were in that PDS were all relative to improvements to our COVID benefits. So previously, before 28th of June, we used to have a strange 21-day, 48-hour rule, which meant that in certain instances, if a policy was issued within 21 days of travel, your customer may not have had COVID pre-departure cancellation and amendment benefits. I'm very pleased to say that that has been removed, and that now it doesn't matter when your customer purchased their policy or when they purchased their itinerary. If they bought a comprehensive care policy, they will have COVID pre-departure cancellation and amendment benefits. We did have some other changes last year in relation to our COVID benefits, and again, they were all improvements. We increased our COVID cancellation and amendment on international policies to $10,000 per policy. On domestic policies, we increased it to $5,000 per policy. And we also removed special excesses that were related to COVID claims. So previously, your customer would select their excess, and if they have a COVID-related claim, there was an additional excess they had to pay. Again, that's no longer the case anymore. Even if it's a COVID-related claim, your customer will just pay their chosen excess that they selected at the time the policy was issued. Now, one of the other things I want to go through is how we actually get to a premium for a customer, because we have had some changes in that over the last 2 years. Some of these have been off the back of the Royal Commission into insurance, and some of them were so that we could be competitive with the policy that you sell versus a customer coming online and purchasing a policy direct from CoverMore via our website. So the first and most important thing that we need to know is that all the destinations or regions that your customer is going to be traveling to. Now, I'm going to push regions today, and I have got a slide all about that and why I'm pushing regions, so I'll get to that later on. But when we want to know the destinations, that's so we can assess the potential cost of a medical claim when your customer's overseas. Obviously, USA extremely expensive in our experience for medical claims, whereas the UK, we've got a reciprocal agreement. So those premiums are going to be very different to reflect that different risk. The duration of trip makes sense. Obviously, the longer the trip, the more expensive the policy is going to be. And this next one, age of travellers in the specific destination, this is a change that we have implemented off the back of the Royal Commission. So previously, quite simply, the older your customer was, the more expensive their policy was going to be. That's not the case with ourselves now. We now look at the age of the traveller and where they are travelling to, and look at our claims history for those types of events. So an example that everybody in Australia seems to recognise and or can equate with is if I have a 21-year-old traveling to Bali on the exact same itinerary as a 55-year-old with all of the exact same cancellation benefits, etc., and policies issued on the same date, that 55-year-old is probably going to be cheaper than the 21-year-old, because our claims experience tells us that 21-year-olds tend to be a little bit loose when they go to Bali, and we see a little more claims for them. So it's now not unusual to see like-for-like policies with a younger person being more expensive than an older person. Even 1 year of an age difference can make a difference to the premium. And as I say, that's simply because it's based on our claims experience rather than simply penalising somebody because they are older. Now, the number of travellers on the policy, on this leisure policy that we're looking at today, everybody is a paying person, including children. Previously, when children travelled for free on the policy, they shared the parents' benefits. That's now not the case. On the leisure policy, because everybody's a paying person, everybody has their own table of benefits. So an example, family of four, everybody has $15,000 worth of luggage cover, rather than previously it would have just been $30,000 sharing mum and dad's. Another thing that we've introduced off the back of the Royal Commission is lead time pricing on our policies. So now the closer your customer is to departure, the cheaper that policy will be. So it's not unusual now if you have saved a quote, when you retrieve that quote, you'll get a little pop-up message to say that the net premium of this policy has been reduced. That's because there's less risk to us for a pre-departure cancellation. So we've made the premium cheaper for the customer. Excesses obviously affect the premium. The higher your excess, the lower the premium. Cancellation limits, again, fairly obvious. Obviously, a policy with $1,000 cancellation limit is going to be much cheaper than a policy with an unlimited dollar cancellation limit. If you add any variations, which are your additional benefits, luggage cover or additional luggage cover rather, snow sports, adventure activities, obviously a higher risk to ourselves, so we have to collect an additional premium. And EMCs, or existing medical conditions. Some existing medical conditions after assessment may require that we capture an additional premium. If we can cover those conditions, we may have to capture an additional premium to cover the risk. Now, that's how we generate a premium. And what I've done over the last 2 years is make it very, very fair for yourselves versus our direct product. And I've worked within the business to make sure that we have a business rule so that if you are issuing a policy at 30% commission, 30% commission, and it's a like-for-like policy, you will always be cheaper than the customer can purchase that policy online. So here's an actual example of this. I should probably update this one now we're into 2024.
Colin, I have a question.
Sure, on you go.
What is the oldest age that CoverMore covers up to for their insurance policies, travel insurance policies?
So on our leisure policies, we do not have an age cap on our leisure policies. So 101, 102, 103 years old, not a problem. You will just have to enter their age using the date of birth. But on our leisure policies, we don't have an age cap. On our business policies, it's 67 years of age at the time the policy is being issued.
Okay, perfect. And we have one more question. So if someone is paying for a whole package for travel, can different families have different insurance policies, even though one person paid for the whole travel
package? Yes, they can.
Okay.
Yes, you can. So we get scenarios very often where it is, let's say it's grandparents who are paying for a trip for an entire extended family. So you've got grandparents, you've got mum, dad, and 2 kids, mum, dad, and 3 kids. They should all be on separate policies. Their individual policies should have enough cancellation benefit on there to cover the number of people that are on the policy. So if it's $2.5 grand a head for the family of 4, we want a $10,000 cancellation limit. And then in the event that becomes a claims scenario, you actually nominate who you want the recipient of the benefits to be. So grandma and granddad are paying for everything. On the family policy, they will claim for whatever they need to claim for, but they will nominate grandma and granddad to be the recipient of those benefits.
Perfect. Thank you so much.
Excellent. So just going back to what I was saying about trying to make sure it's fair that there's a benefit to a customer getting a policy through yourselves rather than going online. I've used this example here where I created 2 quotes on the same day using the exact same travel details, etc. Your comprehensive care policy is the equivalent of comprehensive plus online. There's a couple of variations in the benefits. Sometimes you've got a higher benefit, sometimes the online policy has a higher benefit, but for the most part, they are comparable policies. I have quoted these two using the exact same details at 30% commission, and you can see there that your policy is actually $89 cheaper than the customer can get online. So even an opportunity there for you to earn more commission if you wanted to, but that is the business rule that we put in place, that this comprehensive plus, even if the direct team are doing a promo, their price can never be cheaper than your equivalent policy at 30% commission. So as I mentioned, destinations is one of the most important things. We need to know the potential risk of a medical claim where your customer's traveling to, and we need to know all of the destinations. So you've got a couple of ways that you can do it. In the first example here, we've listed the individual countries, and the restrictive part about listing individual countries is your customer will actually only have coverage for those individual countries. If they decided to, say, maybe visit France for more than 72 hours whilst they were doing their Germany and Switzerland element, with this top example, your customer actually wouldn't have coverage if they were in France for longer than 72 hours. So I highly recommend using the all of regions which cover the destinations your customer will be traveling to. So to cover that example above, Germany, Switzerland, and Indonesia, I've selected all of Europe, all of Asia, and now there's several benefits to doing this. One, it makes it much quicker for you to quote. So if they were doing a European river cruise, which is going through half a dozen countries in Europe, it's much quicker to put in all of Europe. Two, if your customer does change their itinerary, we don't have to cancel and reissue policies as often because we've got more countries covered by these regions. And third, and most importantly, choosing the all of region will either give you the same premium or a better premium than choosing the individual countries. And I'll touch on why that is in a second in the next slide. Obviously, if you're issuing an annual multi-trip policy for a customer and they don't know where they're going to, you still have the option of choosing worldwide. That does exactly what it says in the tin. It covers all the countries in the world and no need to add any additional countries to your policy. Now, this slide that we're looking at here, this is actually in your sales tools, and I'll show you where you can find it. But I just wanted to give you an idea of how we risk the countries and which regions will get the higher premiums. So over here on the top left, worldwide, that's obviously our highest risk. We don't know where your customer is going to, so we need to put a premium to that that's appropriate to cover all the destinations they might travel to. If we then work our way down this list of regions, working our way down and over to the right, as we work our way down, this risk becomes lesser and lesser. So if you issued a policy for all of the Middle East, all of these other regions would automatically be covered. Ideally, we would like to see them on the policy as much as anything because it's peace of mind for your customer. So if your customer knows that they're going to Dubai for 2 weeks, Europe for 2 weeks, and the UK for 2 weeks, I would like to see all of them on the policy. The premium is only going to be based on the highest risk region, but it's peace of mind for your customer. Now, why is it cheaper to use the all of regions? If I look at all of Europe as an example here, we have countries in there such as Belgium, Netherlands, Sweden, Italy. All of those countries we have a reciprocal and medical agreement with. So in the event that they presented themselves to hospital in one of those countries, there's not going to be a claim because we've got a reciprocal medical agreement. So those countries have diluted the risk of that entire region. And by choosing all of Europe, you're going to get at least the same premium as you would get for somewhere like Italy, where we've got the reciprocal agreement. But if it was Germany that we're traveling to, my experience tells me that Germany is very expensive for medical treatment. So all of Europe has reduced that risk, and it will make for a cheaper policy than choosing individual countries. Same if we look at Asia, there's certain countries, Singapore, very expensive, Thailand, very cheap for medical treatment. So the all of Asia region has been aggregated down, so it's the same premium as choosing Thailand. Now, just a couple of shout outs to make here. UK and Ireland is not covered by all of Europe. So if they were doing a UK and Europe tour, you would do all of the UK and all of Europe on that policy. And also Nepal sits out here on its own. It's not part of all of Asia. And that's because Nepal's actually our highest risk. Everybody seems to fall off the side of Everest when they go to Nepal. We need to helivac them down. Then we get to Kathmandu. There's no Australian standard hospitals or Australian equivalent hospitals. So we have to fly them out there. So something like a broken ankle, which might only cost us $2,500 in medical treatment, might have cost us $15,000 to get the customer to an actual facility to treat them. Now, the only time I've found these all-of regions not to be cheaper is if your customer is only going to Canada, because in this example, United States is actually inflating that region. So only going to Canada, I would just put Canada down there. And likewise, if they were just doing domestic travel or New Zealand travel, I would choose Australia or domestic cruise or New Zealand rather than choosing all of the Pacific. But in every other example I've ever tried, the all-of region gives you the cheapest possible premium versus listing the individual countries.
Colin,
do we have any other questions? Yeah, perfect.
Oh, perfect. Someone said, if you are only visiting on a cruise, do you put individual stops, assuming day or overnight only for the countries?
Yep. So we actually, if the customer is going to be in a destination for less than 72 hours, whether it's transit, whether it's a port day or something like that, that individual country doesn't actually have, or that region doesn't have to be listed on the policy. We allow travel to a separate country or region for less than 72 hours without it having to be listed on the policy. Again, for cruising, using the all-of regions is, again, very, very handy because you don't have to put all those port days in. So if they were doing a Pacific cruise that goes into Asia for more than 3 days, you would just choose all of Pacific, all of Asia. Your customer knows that they're going to be covered for everywhere then.
Perfect. Thank you.
Any other?
That was the last
well, that
question
brings us
for
on.
now.
Perfect. That brings us on nicely to cruising then. So if your customer is going to be doing ocean or sea cruising, you do have to add the additional benefit. It's in the second screen. So the first screen, you enter your customer's destinations, etc., their ages, etc. Second screen is where we add our variations, and we do have to add a variation for cruise cover if they're going to be on a cruise for more than for 2 nights or more. This additional benefit covers ship-to-shore evacuations, and it also covers onboard medical treatment, which is historically very expensive. We used to have it that you also had to put cruise cover on for river cruising, but that is no longer the case. If your customer is doing river cruising, you do not have to add the additional cruise benefit. And we've massively reduced the cost of cruising. It used to be about 70% of the base premium. It's now somewhere between 12 and 14%. Now, there is one kind of strange scenario where you don't have to add this benefit, and that is if the cruise is just staying in immediate domestic waters. So an example, the only example I know of in Australia is, in fact, is a Coral Expedition cruise around the wet Sundays. It neither goes into international waters, nor does it have any medics on board the ship. So in that case, you can just choose Australia as the destination, and no need to add the additional benefit. But all the other ocean and sea cruises that I know of in Australia, they do go into international waters, so they can open up their duty free, or that they have international medics on board. And if that's the case, you then need to choose the destination as domestic cruise, and you'll also have to add this 2 or more nights cruise benefit. By choosing the destination domestic cruise, you're going to give that customer all the international benefits on the policy, so it'll no longer be a domestic policy, it'll be an international policy, and it's got all those increased benefits for ship to shore, etc. Now, just as we were saying, if it was a multiple destinations, just list the multiple destinations, all of Europe. This example that our training department has given is Morocco and Maldives. I would actually have done all of Europe, all of Africa to cover that, to make sure we've got the best possible premium for your customer. So as I just mentioned, we've got some situations where the country doesn't have to be listed or the region doesn't have to be listed, and that's if they're going to be there for less than 72 hours. Now, it's details as being a stopover in the PDS, but it doesn't matter if they're visiting there for a couple of days or if they're in port for a day or whatever, that 72-hour rule would apply, and that country doesn't have to, or region doesn't have to be listed on the policy. Now, you can also sell policies for people coming into Australia. So it's very popular for the VFR, the Visiting Family and Relatives market at the moment. It's a kind of restrictive policy. The customer has to be less than 69 years of age at the time the policy is being issued. And it is our essentials care only policy. So it only covers them for cancellation and medical treatments whilst they're here in Australia. We also can't assess additional medical conditions. So it's only the conditions that are automatically covered in our PDS that the customer will be covered for. Fairly strange, but it is a growing market. And it's a policy that we are seeing being issued more and more. And again, I've already mentioned annual multi-trip policies. List all the regions. Highest risk region is where the premium will be based on. And if they don't know where they're going, issue a policy for worldwide, and it will cover every country in the world. Any other questions before I move on to this part, Amanda?
Not right now. We don't have any questions.
No. Excellent. Okay, so here's an example of how we can manipulate your quotes to get the best possible premium for your customer. So the top example, I've got myself and my fictitious 7-year-old traveling to France and Germany, and I've done it how you would initially think you would do it. I've listed France and Germany, my child in the child box, got my cancellation in excess, and the premium has come out at $586. Now, the very same day, I did another quote, exact same details, but all I've done this time is I've changed the destination, because we know that France and Germany is covered by all of Europe. And that's all I've done to change in that one, and the premium has dropped down down to $523, simply by changing the destination. Now, in the third example, I've actually been a little bit cheeky. This is only something that you can do on a single trip policy. It will not work on an annual multi-trip policy. But what I've done is I've actually added the child up in the adult section. I've clicked the add more travelers button, so I could put more people up in here. But you can see that by moving the child to the adult section, the premium has vastly dropped down now to $323. Now, the reason for that is that policies with children on them quite simply get claimed on more often. And Zurich, our underwriters, charge us an additional premium for having the children on the policy. And their trigger to collect that premium is by putting the child down here in the child section. Now, on a single trip policy, I can trick Zurich. I can put the child up into the adult section. It doesn't affect the policy, it doesn't affect the benefits, and it doesn't affect them when it comes to a claims scenario, because ultimately when we issue this policy, we're putting the child's true name and date of birth, etc. in when we're issuing it, so it has no impact on their policy. We're simply cheating Zurich out a little bit of underwriting premium. Now, as I say, this only works on a single trip policy. An annual multi-trip policy will recognise that the age isn't a child age, so you'll have to put them down in the child box. And also at some point, Zurich might work out that I'm telling kind of 9,000 travel agents that they can do this, and they might switch it off. But for the time being, you can definitely put the child up in the adult section and get a cheaper premium when you're issuing single trip policies. So COVID benefits, as I say, COVID's still a #1 claim when it's on trip, okay? Virtually never pre-departure now, because it's really only cruises that do any testing pre-departure, but it is very common on group trips whilst they're overseas. So the cancellation benefit, whilst it's capped at $10,000 per policy whilst they're overseas, generally it's enough to cover the few days that they're missing of whatever their itinerary is. If they're doing a Kentucky and they're put off the bus for a few days whilst they quarantine and get a clear test, $10,000 sufficient to cover those few days worth of cancellation. You've also got additional expenses in there which will cover them to catch back up with the itinerary once they have got a clear test. And in the event it does become a medical situation and they're actually hospitalised, it's unlimited medical cover whilst they're overseas. Same goes for domestic trips. We're hardly seeing any COVID-related claims for cancellation for domestic trips, but it is capped at $5,000, both pre-departure and on-trip per policy. And again, they've got the $5,000 worth of additional expenses to catch back up with their itinerary if they are put off a group trip. We do have some changes coming to our COVID benefits in Q2, and they are going to be fantastic changes, but for the moment, these are the current COVID caps. And the unique selling points, why choose a CoverMore product? So lead time pricing, we're the only people in the industry that has this lead time pricing and prices it appropriately depending on your time to departure. So the closer to departure, the cheaper the policy will be. Now that river cruising is inclusive, that has made a big difference, certainly to these European river cruises, Nile and Murray River. Being able to choose excess is very important to a lot of customers. Some people are very keen to have a zero excess, especially on annual multi-trip policies, because if you have, let's say, 2 claims at $250 excess, that's you out of pocket $500. Being able to choose cancellation limits of up to unlimited. So we used to have caps on our domestic policies, no longer the case. You can issue unlimited cancellation for domestic policies too. Our average claim handling time is within 10 working days. So your customer theoretically could submit their claim on the go, providing they've got the details. We could have it settled whilst they're still on their holidays. Now, I think this is one of the strongest selling points for CoverMore. We have by far and away the highest claims settlement ratio in the industry. Over 90% of eligible claims, and what I mean by eligible claims is claims for events that you can actually claim for, not just that you didn't enjoy your cruise. Over 90% of our eligible claims get some form of settlement, and over 80% of them get the maximum benefit they're entitled to. Industry standard is somewhere between 55 and 60% claims ratio, so we are way above the industry standard, and you can genuinely say that your customer is more than likely to have their claim settled for a true claims event. Also, no out-of-pocket expenses for hospital treatment. Obviously, your customer has to let us know that they're at the hospital. We don't have a crystal ball, but providing they contact us, we will deal with the hospital direct, and we will pay those expenses directly to the hospital. Really important for cruising, really important for US holidays. We will only treat customers in hospitals at least the equivalent of an Australian standard. So that may involve us flying them from that country to another country for treatment. We also have the longest cooling off period in the industry. So your customer has 21 days to make sure the policy is fit for their needs. And if they cancel within that 21-day period, it is a full refund. We've got the highest rental car excess covers in the industry, with $10,000 excess cover on international policies and $6,000 on domestic. And all of our policies, if you require assistance, it's through our own World Travel Protection team. So World Travel Protection, our multi-award-winning team, doctors, nurses, security personnel, etc. In the event of emergency, they contact us and we start to deal with that emergency immediately. But also, it doesn't have to be emergency assistance. It can be for things like, how do I order my medication in Spanish? Where is the nearest car hire place? And to make it super convenient for your customers to contact us, we've also got our multi-award winning app. So we won this app was released last year, and we won 4 industry awards last year for the app. So it's a free download for your customer from either of the app stores. You have sales tools in your sales tools with QR codes so they can download it directly. They enter their policy number and the destinations that they're going to. Since they enter the policy number, they have all the policy details. It has the full PDS in there. And we can also then push them information about the destinations that they are traveling to. So we can give them real-time alerts for things like natural disasters or civil unrest or anything like that. We can push them alerts about things that are happening in the country before they go as well. And there's also a push-to-talk functionality in the app. So providing the customer has internet access of any type, whether it's Wi-Fi or 3, 4, 5G, they can push the push-to-talk button, get straight through to World Travel Protection and deal with that medical emergency or find out where the car hire place is. So it's a completely free download. They can upload multiple trips into it, so they get information sent to them about multiple trips. And in the event of an emergency, we can also geolocate them through the app as well. So if it's a natural disaster or something like that, we can push out a thing to geolocate our customers and make contact with them through the app. So we can confirm that they're okay, or can start and work out how best we're going to be able to provide assistance to them. Now, you and your customers earn velocity points. So on our leisure policies, your first name person on the policy can earn up to 2 velocity points for every dollar's worth of insurance that they purchase. It has to go to the first named person on the policy. You have to enter their velocity number at the time you're issuing the policy. So when you're entering their personal details, and those velocity points will hit their velocity account after their departure date. With yourselves, you earn 1 point, regardless of whether the customer's getting the points or not. You earn 1 point for every policy that you sell. It's an automated system. It's you have your velocity number associated with your profile with us, and those velocity points hit your account after the 21-day cooling off period. So with premiums being as they are at the moment, those velocity points grow fairly quickly within your accounts. And that's going to bring me on to CoverMore Connect in the live system. So I'll just stop sharing this screen for the moment and find out if we've got any questions whilst I bring up the live system.
Perfect. Yeah, we had a question for groups.
Yep.
For group travel, how many people does a policy max out at, or does it max out?
Yeah, so it depends where they are traveling and how they are traveling, is how a group policy maxes out. And I'll show you where you can find all that information just a moment when we go on to the live system. The group policy generates a 10% net discount off the premium for you. So there's nothing else you have to do once you upload the customers in there, but I will show you where you can find all the information on group policies when we jump into the live system.
Perfect.
Any other questions?
No, that was the only question for now.
Okay, I'll just start sharing my screen again. If you can just confirm that you can just see my login screen for me, please. Is that my login screen you can see?
No, I don't.
Hold on.
There.
How's that? Yep.
Yes,
perfect.
We can see it. Perfect.
Excellent. Okay, so as I say, I'm just going to jump into B2B and show you some of the examples that we did. So group policies I'll come back to in a moment because it will take me quite nicely through to CoverMore Connect. Leisure policy, the policy that you're going to issue 99.9% of the time, covering people traveling for both business and leisure, because there is business elements in that leisure policy. Long stay you won't have because it's something that I'm working on at the moment. Your business policy is an annual multi-trip policy for people that are traveling several times throughout the year for business and leisure. It has 6 weeks of pure leisure in the policy. Like with any annual multi-trip policy, the policy runs for 12 months from the first departure date. So if I wasn't departing until, let's say, mid-June, I've got, as soon as the policy is issued, we've got cancellation coverage for that first departure, and then the policy runs for 12 months after that. Partner and spouse can be on the policy, and it's also the only policy that we have where children still travel for free. So with that, they are sharing the parents' benefits, and they have to travel when the parents. It's also the one that we give you your agent rate discount. Again, you can include partner, spouse, children on that policy using your agent rate discount. I always recommend that you do it for worldwide because you don't know where you're going to be traveling throughout the course of the year. The difference in price is negligible compared to choosing a lesser destination, and we can't change destinations after a policy's been issued. So I always recommend that you do it for worldwide. To get your discount, you just simply click the agent rate tab there, and it takes all the commission off the policy, plus it takes 20% off net. So to give you an example, we'll do it for myself. I think the last time I did this, it's sub $500 for the year. $511. That is a 30-day worldwide annual multi-trip policy with unlimited cancellation and cruise cover included as standard. The business policy, you don't have options to add cruise because it's covered as standard on the policy.
We have a question,
now I'm going to go back. Sure.
When would you choose multi-trips? Does 2 to 3 trips per year apply to multi-trip?
Yeah, I would say 3 probably, depending on the length and where they're traveling to. So if they have 1 trip and a longer international trip, so just doing 2 trips, yes, probably an annual multi-trip is going to be more efficient. General rule of thumb is approximately 3 trips in the year would mean that an annual multi-trip is probably going to be more efficient for your customer than several single trip policies.
Perfect.
Okay, group policies, as I said, we give you a 10% discount off the net premium. The policy itself is your leisure policy, so that's the features and benefits that the customer is going to get. And we upload the customers, the travelers' details using a template, which can be found in your sales tools. So I click Sales Tools, it's opened up a new tab for me and it takes you to your CoverMore Connect resources page. And if I click on Sales Tools and go right down to the bottom, this is where we get the group names template. So you can download that, enter the traveler's details, save it to your desktop, and then you can add the travelers here. You would choose your file and upload the travelers. The system will automatically give you the discount off it. Again, in Sales Tools, back to resources, we were talking about limits, etc. We do have a group flyer policy somewhere. There we go. Group flyer policy. If I click on that, it's got details of the numbers of travelers, etc. that can maximum we can have on any one policy at a time. Also, the Sales Tools has details of your discounted policies as well. So I'll come back to here in a minute because there's a couple of things I want to show you in here, but that's where you get the details for your group travel. Now, I just want to do a couple of examples of manipulating these policies and using regions rather than individual countries. So if I choose, we'll go worst case example here, United States of America. I'll do a single trip for 10 days. Now, when I'm doing these examples here, I'm using ages because I'm making people up and I can't remember the dates of birth that I've made up, but I always recommend that you use date of birth. If you quoted by age and the customer has a birthday between the time that you issue the quote and the policy is actually issued, the system's not going to like it and it's going to make you re-quote, whereas date of birth, the system accepts it and it will just roll with it. But I'm just using age to make it quick and dirty. And I'll have a 10-year-old, and yes, we are Australian. Okay, so the base premium, before I've added cancellation and excess there, the base premium is $381. Now, if I go back and I use all of North America rather than United States, all of North America's got Canada, Mexico, and United States in there, and get the quote. Instantly, that's dropped down by $61 to $320. And if I do the cheeky thing that we can only do on a single trip policy and move my child up into the adult section, as I say, it has no impact on any premium, any policy benefits, anything like that. If it was me, a partner and 2 children going, I would click add more travelers. We can put them in there. Obviously, we've got more children. Some of them are going to have to go down below the line, but at least we've saved what premium we can. And if I go and do that now, we dropped down to $261. So we've saved $120 on the base premium just by manipulating the destination and putting the traveler, this child, up into the adult box. Now, again, in your sales tools, you can find out which countries are covered by which region. So if I go to my sales tools here and I go to the regions of travel flyer, all of these documents are PDFs, so you can use the find functionality. So I can do Control F and I can type in a country. I'll do Turkey, and it's taken me straight to Turkey and highlighted that Turkey is in all of Asia. So rather than me doing a policy for Turkey as my destination, I would choose all of Asia for that particular one to make sure I'm getting the best possible premium. And that Control F functionality works on all of the tools that are in this website. One that I use on a daily basis is the activities. Do we need to add adventure cover? Is it covered by the standard policy? Again, I just do Control F for find and I'll type in an activity. I'll do off-roading and it's taken me straight to off-roading. And I can see that, yes, it's covered by the standard policy, providing we're not competing or racing. If it says yes, it's covered by the standard policy. If it says no, it will say that cover can be included if you add the additional benefits required. So rock climbing, we need to add adventure cover. And then it will say, no, it's excluded from the policy as a general exclusion. So rodeo and running with the bulls, for fairly sensible reasons, we have decided we're not going to insure your customers whilst they are doing those activities. So that's all there within your sales tools. Okay, one last thing I want to cover off is your additional benefits. So your excess, say that affects the premium, cancellation cover affects the premium. cancellation cover, you want to have sufficient cancellation cover to cover the itinerary for all the people on the policy. Cancellation cover is always per policy. All of our other benefits are per person on the policy. So additional luggage cover, the policy has $15,000 worth of luggage cover per person, and there's individual item limits. Additional luggage cover gives you an extra $2,000 for one of those individual items. So laptop, $4,000. I could choose additional luggage cover and itemize my laptop to cover it for up to $6,000. Snow sports is fairly obvious. If you're skiing, snowmobiling, or snowboarding, you need to add the snow sports cover. However, if they are doing something like heli skiing, which requires adventure activities, you do not need to add snow sports cover and the adventure activities. Adventure activities cover snow sports plus all the additional benefits. So if it's heli skiing, off-piste skiing, something like that, you just need adventure cover. You don't need to have both of them ticked. Cruising, we covered off in the presentation. And motorcycle, moped, again, you have two options. The first one is for motorcycles and mopeds under 250 cc's. If you're going to be the rider, you need to have an open Australian driving license to be the rider. That's our minimum requirement for you using it overseas. If you're going to be the pillion passenger, obviously you don't have to be licensed, but you still have to have that cover if you're going to be a pillion passenger. Motorcycle and moped plus is for vehicles over 250 cc's. However, we do have a caveat to it that the rider, the person that's going to be operating the vehicle, they have to have a motorcycle registered and insured here in Australia up to at least the same size that they will be riding on our policy. So I have a 1,000cc motorcycle. I can take out this additional cover and I can hire up to a 1,000cc motorcycle overseas. I couldn't get anything bigger than that whilst I was overseas. Obviously, again, a pillion passenger, they don't have to be licensed, registered and insured with a vehicle. But if they are going to be in a higher powered motorcycle, they will also have to have this additional cover. Do we have any questions, Amanda, before I quickly just jump back into CoverMore Connect?
They said how many people is considered for a group policy?
Okay, good question. So it's 10 or more. It has to be at least 10 traveling on the same itinerary.
Perfect.
And that actually also brings something else to mind. There seems to be a myth out there that everybody on the policy has to live at the same address. Not at all. What address they live at here in Australia doesn't affect a claim scenario. So if you have boyfriend and girlfriend who live at separate addresses, they can definitely still be in the same policy. If you've got grandma and granddad taking two grandchildren away and they live at separate addresses, yes, they can be in the same policy. Likewise with a group one. Obviously with a group, they're not all going to be living under the same roof. Okay, so just jumping back into your sales tools, I'll CoverMore Connect. I've showed you what's in your sales tools, some of the examples there. We've got a whole load of customer flyers that you can print out and actually use in store or email to customers. It includes the PDSs, etc. And you've also got the app flyer where the customers can use the QR codes to scan and download the app, so they have all of their details in there. You've got the Meet Us tab. So if you need to contact any of your sales support team, all of our details are here. Anyone that's a national business manager does the same role as me. So we're for training, emergencies, escalated events. National sales support should be your first port of call via email for day-to-day inquiries about policies, amendments or changes. They're an agent-based resource only. They don't deal with any customer inquiries. They know your products inside out. And between Sarah and Eugenia, they've got in excess of 25 years of CoverMore experience. So I think the building was actually built around Sarah. She's been here that long. And please don't phone Nikki. Nikki's my boss. If you're phoning Nikki, I'm obviously not doing my job correctly. But my contact details are here, so you can reach out to me. Also, the landing page, our main page, has themes relative to travel at the particular time. It's updated on a monthly basis. So we had a big incentive at the tail end of last year. So it's got all our Disney for Mill winners. We're taking 8 lucky agents to California, doing a VIP Disney experience in the Disney Foundation. But tail end of last year, it was all about, we know that people are going to be celebrating Christmas and New Year. So we had articles in there relative to alcohol and travel insurance. And we are incredibly liberal when it comes to alcohol content and travel insurance. We allow you to be up to 0.19, so almost 4 times the drink and drive limit before we will say that alcohol played a part in your claim and it may result in your claim being denied. So that's updated on a monthly basis with themes and features that are relative to travel at that time. Like I say, the one over Christmas was about alcohol, but prior to that, it was about schoolies and things like that, because obviously that was the month prior in November, a lot of schoolies trips and things like that happening. And I think that kind of gives you all a bit of an overview and brings you up to speed with our leisure product and gives you pretty much all the knowledge that I have. So I'll stop sharing and I'll find out if we've got any questions before we wind up there.
Perfect. Thank you so much, Colin. This is an amazing presentation. I think you went over everything and anything they needed to know as an overview, so this was wonderful. We do have a question, and it is, can two friends traveling together be covered in the same policy?
Absolutely. Like I said, they don't have to be on the same, they don't have to live at the same address. The requirement is that they're doing the same itinerary. And when I say same itinerary, it means that they're departing at the same time, returning at the same time. If me and let's say me and my brother, we go to Europe and I decide to go and do an island hopping trip around Croatia and Brian stays in the mainland, we're still covered by that policy. So the requirement is that they're traveling on the same itinerary. They don't have to be at the same address.
Perfect. I don't see any other questions at the moment. I think you were able to answer most of the questions the agents had during, as well as you explained it really well during your presentation of everything. So we really appreciate that. So thank you, Colin, for coming out today and doing this webinar for all of our agents in Australia. We really appreciate you. And if there's anything else you'd like to add, I'll give you this time now.
Yeah, no problem. And if anybody does think of a question afterwards, obviously, I've showed you, go to your sales tools, take the CoverMore Connect, click on the Meet Us tab, and you've got my contact details direct, so you can reach out to me directly if you think of something that comes up afterwards. And likewise, Amanda, if anybody watches the recording and they have any questions as a result of that, please direct them straight to me.
Awesome. Well, thank you so much, Colin. Thank you, everyone, for joining us, and I hope you have a wonderful day.
Excellent. Thank you, guys. Thanks for the opportunity. Bye.
Thank you. I think Dave